The crypto market faced another major sell-off this week, with the world's largest cryptocurrency, Bitcoin, losing a quarter of its value this month. Bitcoin fell to new lows of $33,000, its lowest level since July 2021. This is a 25% drop since the beginning of the month and a 51% plunge from its November peak of $67,000. The crypto market has seen a huge $130 billion decline in value in the past 24 hours. In this video, we're going to look at the 5 main reasons why Bitcoin's been crashing, try to understand why it's happening now, and also look for indications about what's going to happen next. Welcome back to BeInCrypto. My name is Jessica Walker. If you are new, please make sure to subscribe. We bring you videos like this regularly. The drop in the crypto market has come shortly after the global stock market marked a rocky start to the year. Investors reevaluated the actions of the Federal Reserve and other central banks against inflation, but also reassessed the direction in which the world's economy is headed. Well, why have they done this? Bitcoin, along with the rest of the crypto market, has become pretty correlated with the traditional markets. And Bitcoin here, in the orange color in the chart I'm showing you now, in particular, has reached its highest correlation since the stocks since September 2020. This is why when the stock market heads south, as we've seen in the beginning of 2022, so does Bitcoin. Well, now, according to an interview in Wall Street Journal given by Clara Medellin, who actually is a research director at the cryptocurrency market data provider Kaiko, she's actually said that cryptocurrencies are sensitive to global policy changes and they no longer behave as an isolated risk asset. She even went as far as to say it won't surprise anyone if they become more volatile once the liquidity taps are turned off. And it is to be expected that for some this happens really fast. Some projections will say the Fed will increase interest rates potentially even by March in an attempt to actually discourage businesses but also individuals from borrowing, and as a result attempt to slow down the economy. And lifting rates will make borrowing more and more expensive, and this should have a dampening effect on inflation as well. Point number 2, Russia's crypto ban. One of the biggest triggers of the sell-off in last week was the proposed crypto ban in Russia. So last week, the Central Bank of Russia actually suggested banning the act of crypto mining and also any use of cryptocurrencies within the country. And this was threats to financial stability, citizens' well-being, but also sovereignty of monetary policy. And these were all potential reasons stated by the Russian Central Bank. Shortly after this though, just days after the Russian Central Bank suggested banning crypto in the country, the Ministry of Finance actually admitted that it's opposed to the idea. Why? Well, this was the latest of the cryptocurrency crackdown moves globally, following similar notions we also saw in the United States, and who could forget China. Now, these are where concerns have been voiced that crypto might compromise control over monetary and financial systems. Going back to Russia last week though, it has been among the countries that have opposed cryptocurrencies for years now, accusing them of potentially all sorts of criminal activity, from finance to terrorism to also money laundering. Eventually, cryptocurrencies received legal status in 2020, but as a result, they were banned as a means of payment. Russia's central bank actually proposed introductions of mechanisms to block exchanges of cryptocurrencies with fiat currencies, but also prevent financial institutions from carrying out any such transactions. So where did this leave us? The proposed restrictions also included crypto exchanges, and one of the leading cryptocurrency exchanges, Binance, actually pledged to work with local regulators in hopes to actually have an opportunity for open dialogue with the Central Bank of Russia that could potentially help protect the interests of crypto users in the region. But the central bank actually didn't envision any restrictions of owning crypto, which actually some would say is good news for those that were already actively in the market. The current annual transaction volume of Russia's crypto users amounts to roughly $5 billion per year, which is pretty impressive. Number 3, we have geopolitical uncertainty. Now, Bitcoin also seems to be affected by instability in different regions of the world. The capacity of Bitcoin's computing network took a heavy hit several weeks back when Kazakhstan's internet access was severed during a political uprising. This had a huge impact on the country's rapidly growing crypto mining operations. So to know just why this is important, Kazakhstan was actually the second most important hub for Bitcoin mining after the US. Now, this really quickly happened after China enforced strict bans for crypto miners in the communist country. Now, to illustrate the growth rate in Kazakhstan, there's actually data from the Financial Times, and they state that back in April 2021, Kazakhstan accounted for 8% of Bitcoin's hash rate. By August 2021, it had 18% more, doubling the space of the last 4 months. Now, this was after the big news that China's ban on crypto mining after the Chinese miners fled to alternative locations. So it's no surprise Kazakhstan was a big hotspot. And the last couple of days, we've had more tension between Ukraine and also Western countries on one side and also Russia on the other. And this has also had an impact on the Bitcoin price. The fourth reason we can identify is the increased correlation with tech stocks. And here is why. To many investors, Bitcoin and crypto are actually seen as tech, and they buy and sell them pretty much in sync. We can actually see in the chart I'm showing you now that measures the correlation between Bitcoin and also equities, and this chart's from Bloomberg. It reached its record high back in November, and Bitcoin has since fallen with a similar rate to the Nasdaq index. And the Nasdaq index is mainly comprised of tech and growth stocks. Well, Nasdaq has now lost over 10% since its own high in November, and that is now formally the correction for the index. While a 10% drop might be bad news for Nasdaq investors, Bitcoin is of course far more volatile, and while there's no definition of what a correction is, it's lost 80% previously and still managed to rebound to new highs in previous Bitcoin cycles. Now, the interesting thing is here, we might be in a new era in which the assets are pretty much tied to the hip. The correlation itself isn't something, of course, but the data suggests it has grown to record highs these past few days, as you can see from this chart shared on Twitter. According to its Bitcoin correlation to the Nasdaq, it's almost at 0.66, almost double from the end of November. Number 5 on our point, the Bitcoin futures sell-off. This, the most recent crash, and in response, the most recent sell-off, seem to be mainly driven by short-term traders and investors, those that have come into the market in the last 6 months. And after a very successful year, Bitcoin was bound to attract large groups of people, and many poured their money into Bitcoin future ETFs. But the drop last Friday on January the 21st liquidated over $1.1 billion in crypto futures. Almost 300,000 traders had positions closed in the 24-hour period before Friday's bottom. That's according to data from CoinGlass. So the question is now, what's next? It seems that if there isn't a solid rebound, perhaps reclaiming the $40,000 area, this support could hit even more traders that opened positions on various exchanges in the last month. This also could provide less fuel to reach the new highs in 2022. We could actually already be in a crypto winter. I'm going to leave that to you to summarize, but here's the 5 main reasons why the Bitcoin price dip has fallen. Let's take a look. But before recording, there has been a bit of a rebound, and the most popular cryptocurrency, Bitcoin, was trading at $37,000, and it has since retraced to $35,000. I want to turn to you now and ask, do you think we're in a crypto winter? Are you holding out for brighter days, maybe reducing some positions, or maybe this is a great buy opportunity? Share your thoughts with me. Don't forget to like and subscribe if you have not already. We want to hear your thoughts. And if you are looking to get started in trading, you can buy many coins on StormGame, which is BeInCrypto's partner cryptocurrency exchange. The link is down in the description box below. Check it out and let me know how you get on. That's all from me. My name has been Jessica Walker. Don't forget to subscribe, and see you all again next time.